Hello, Year 11 accounting students. So let's continue on with 7.4. So I just want to go through a few more things here. Obviously, the cash journals you should be getting comfortable with. Cash flow statements may be getting a little better. That can be a little tricky to get the classifications correct. What I do want to go over today is the GST calculation, which students traditionally struggle with, and also the introduction of a new financial indicator called the cash flow cover. All right, so let's go through this activity. So I've already put in the details, so if you don't have the ability to keep up with me, that's fine, because I think most of you know what goes on in here. But we'll go through and record the transactions together. Let's just move me out of the way there. So the key again is the column headings, frequently occurring items, sundries, where they only occur once, and the GST, which takes in the regular GST transactions. So when you receive money and for providing services, GST is added, and when you purchase something or pay for an expense, GST is added to the transaction. Make sure your details are the account names only, so not a description, so the account names. So you don't need to know the individuals involved, who you're buying from or who you're receiving money from, just the account names. What was the reason for the receipt? Same with your payments, just the account name. Right, we don't say owner took money home, we write drawings. Right, so we don't say purchase of camera equipment from JB Hi-Fi. You put the name of the ledger or the account name that we want in the balance sheet and in your various accounting reports. Okay, so let's get to the first one. The first one is interesting. So this one will have an effect on every question you do from here on end. With GST, we are collecting GST via your cash receipts. You owe that money to the government. And in your payments, you are paying GST for various things, but you're able to claim that as a refund. So the total of this column here, what you're receiving and owe to the government, less this column here, which we're able to claim back as a refund, ends up with a net amount. And that was that activity we did on the very first lesson, where we worked out whether it's a cash receivable or cash payable. So if your receipts are going to be higher, right, your GST received is going to be higher than what you're able to claim back as a refund, then you will owe the government money, which is, as you may recall, I said the most common event because businesses are basically running to make a profit. So you'd expect the GST received to be higher than the GST paid. Right, you'll notice the first transaction, we've paid the GST settlement to the Australian Tax Office. So you can see up here, right, the GST payable was $720, right, that section there. So that means that that's the amount that needs to be paid to the government in the next reporting period. Right, so you can see that there. I'll even try my little marker there. There we go. So we go with the red pen. The GST payable, that figure there, is what was owed at the start of the period. And what usually happens is then you'll pay it. So we've paid the government. So in terms of recording that, what we do now is you go down to the first cash payment, and you write GST settlement. GST settlement. And you put in the amount. And usually the amount will be exactly what you owed from the previous period. So when it says paid the GST settlement, you think, well, how do I know what that was? The question will give you the opening balance. Right? So we owed $720. We've now paid it. Obviously, there'll be no GST attached to that because this is the GST tax. Now, what a lot of students will want to do is go and put it in here. Right, under the GST column. But this is for GST that's refundable in the current period. This is not a refundable amount. This is you paying the government the amount you owed. So it has to go in the sundries column because it will only happen once. Right? You'll only pay the balance once in a reporting period. So that's how you treat the GST settlement. Okay, let's go to the other transactions. Paid for photography materials, $8.50 plus the GST. So $8.50 plus the GST. Then you add those two together. If I do it correctly, you'll add those two together. Right, so $9.35 is what's paid for photography. Received $4.62 including GST for portraits. So $4.62 for portraits including GST. So divide by 11, or just grab it straight off the question. Go to portrait fees and add a 0. Right, so that's that one. Received $6.60 for wedding photos, including GST, on the 6th. $6.60, GST, wedding photos, 60 plus a donut. Make sure both sides balance. Right? So this side is always got to equal everything over here. So you check that as you go. Make sure that what's in here equals the two amounts, or one amount maybe, on the right of that bank column. Cash drawings, so we go down to it doesn't say what they are. Yes, it does. Got to go across here, don't I? Cash drawings of $400. So no GST attached to that. No drawings column, so it goes into sundries. And we go up to the interest on investments. So this is interest on investments. That's a little tricky. So $110. Right. How do I know it's a receipt? Because it's an investment. Investment means you've deposited money, like we did in Chapter 4. So if you're investing, you're not borrowing. Right. So a borrowing interest would go down as a payment. So on a loan, for example, or on your bank overdraft. But when you're investing money, you are earning money. Right. So the bank account will go up. So it's a receipt. And the cross-reference is BS, which stands for bank statement. Received $8.80 for wedding photos. So including GST, yep, $8.80, including the GST. And wedding photos is the first one, so $800. Paid wages for $500. Straight into the wages column. And we go up to the 18th, received $385, including GST. So $385, so $35 for portraits, so $35, so $350. Paid for materials, $750 plus GST. So $750 plus GST. Add the two together. We get $825. 25th received for family portraits, $550 including GST. So $550. Portraits, $500, GST $50. Then we purchased camera equipment for $1,950 plus GST. So the camera equipment is obviously sundries plus your 10% tax. So if you want to do a calculation, hit that figure and then multiply by 10%. $195. Then you add those two together to get the total amount paid. So purchase camera equipment, if you go across there, you can see $2,145 is what was paid. Received $220 for, including GST, for portraits. $220, 20 there, and the portraits were the second one, I think. Yep. And finally, paid wages. And I've missed one. The 25th I missed, did I? So 25th was received 550. No, I've done that. Received 990. So the 23rd is the one I've missed. So hopefully you weren't copying along there. So the 25th, 23rd, sorry, was 990 including GST. So 990 for wedding photos. So 990 there. Sorry about that. Hopefully you're able to fix that up on your records. I'll give you an Excel version of this as well. So the one I was about to do was wages down the bottom, $647 for $500. Okay, and then we total all that up. And copy that across. Right, so what are they going to do? Well, bank is an asset. That's increases in owner's equities. That's revenue. Portrait fees is revenues. That's going to increase owner's equity. The sundries is a revenue, earning bank interest. And the GST is a liability. Right, so if we make those changes, the accounting equation will balance. Now they're all going up. So A is going up, OE up, OE up, OE up, and the liability up. We do the same thing down here. The asset is going down in this case. Photography materials would be an expense. Wages is an expense, which decreases owner's equity. GST is a liability, right? So that's decreasing. So that is a negative figure. Actually, I might just change that. I might just use the arrows. And the sundry. So the GST settlement is going to decrease liabilities. The drawings is going to decrease owner's equity. And the 1950 is going to increase assets. Right, so these are all going to be decreases, and that's going to be an increase. So the A there will be a decrease to your assets, and these will be a decrease to owner's equity. And a decrease to owner's equity. Alright, so the whole thing will balance if you did that accounting equation. So assets down because you're paying that amount of money. Let's total all those up. And then copy that across. Okay, so I'll leave that video there, and then that'll give you a chance to work through that in this double. All right, so do that first. So complete the journals and listen to my description of it. You can even have a go at doing the accounting equation down there with the numbers to make sure that it all balances, that A equals L plus OE. All right, so you can do that yourself. So does A equal L plus OE, and you can do that the same for payments as well. So just do your little test and see does it all balance, right? And I'll put another video up and using this information that you've got here in the second part of the lesson. Then we can go through and have a look at the cash flow, the GST calculation, and the cash flow cover. So get the cash journals part right. Make sure you really understand the entries, making sure, do I add GST? Do I include GST? Right, so you got the right figures. What goes in the sundries column, and make sure your account details are the name of the account that we want to see in our accounting reports. Right, so I'll be back shortly with the second part of this lesson.